In 2025, it's not just about saving, it's about making your money make more money. That's where income-producing assets come in, and even though I'm not covering Bitcoin, I'll leave a link in the description for a video you should see, because you need to be aware of what's happening and it's a way to diversify. In this video, I'm diving deep into 7 of the best income-producing assets that you should have on your radar for 2025. We're going to break down each asset class, talk about the risks and rewards, and how you can start building your own passive income portfolio today. But enough talk, let's jump right into it. Not knowing something can be very expensive. The purpose of this channel is to provide valuable, practical and interesting information that benefits you, so please subscribe. Alright, let's kick things off with the most set it and forget it option on the list. Certificates of deposit, better known as CDs. CDs offer something incredibly valuable in today's market stability. With a CD, you're lending your money to a bank for a fixed period. And in return, they pay you a fixed interest rate. Think of it like a guaranteed return on your investment, no matter what the stock market decides to do. Plus, CDs are FDIC insured up to $250,000, meaning your money is as safe as it gets. If you're risk-averse or need a safe place to park your money for a few months or years, CDs are worth considering. They're also great for short-term savings goals like a down payment on a house or a new car. Let's move on to another fixed income favorite, bonds. Think of bonds like IOUs issued by governments or corporations. Government bonds are backed by the full faith and credit of the government, making them close to risk-free. But with that safety comes lower returns. Corporate bonds offer higher interest rates but carry more risk. The key with bonds is understanding the relationship between risk and reward. Bonds are a fantastic way to diversify your portfolio, reduce your overall risk and generate a steady stream of passive income. Plus, they can act as a hedge against inflation. Now let's talk about everyone's favorite real estate. Before you buy another rental property, let me introduce you to a hands-off way to invest in real estate, REITs or real estate investment trusts. REITs are companies that own and operate income-producing real estate. The best part? REITs are legally required to pay out at least 90% of their taxable income to shareholders in the form of dividends. You can invest in REITs that focus on specific types of real estate, like residential, commercial, or even healthcare. Plus, REITs are highly liquid, meaning you can buy and sell them easily on major stock exchanges. If you're looking for a way to add real estate exposure to your portfolio without the headaches of property management, REITs are definitely worth considering. Let's move on to a classic income-producing asset, dividend-yielding stocks. Dividends are like little bonuses that companies pay out to their shareholders, usually every quarter. When you invest in dividend-yielding stocks, you're essentially buying a piece of those companies and getting a share of their profits. The beauty of dividend stocks is that they offer the potential for both growth and income. Not only can the value of your shares increase over time, but you're also getting paid just for holding on to them. Think about companies like Coca-Cola, Johnson & Johnson or Procter & Gamble. These are the types of companies that have been around for decades, weathering economic storms and rewarding their shareholders along the way. Dividend-yielding stocks are a fantastic way to build long-term wealth and generate passive income. Okay, now let's talk about the asset class that has made me financially independent: rental properties. Rental properties can be an incredibly powerful wealth-building tool, providing you with both passive income and long-term appreciation. Now, I'm not going to sugarcoat it. Being a landlord takes work, but the rewards can be significant. Not only are you collecting rent every month, but you're also building equity in an asset that's likely to appreciate in value over time. Plus, there are significant tax advantages to owning rental properties that can save you a ton of money come tax season. You can start small with a single-family home or even a duplex. If you're willing to put in the work or invest passively through platforms, rental properties can be a fantastic way to build wealth and achieve financial freedom. Let's move on to a more unconventional income-producing asset: peer-to-peer lending, or P2P lending for short. P2P lending is exactly what it sounds like. You're essentially acting as a bank, lending your money directly to borrowers through online platforms like Lending Club or Prosper. The upside of P2P lending is the potential for higher returns compared to traditional investments like CDs or bonds. However, with higher returns comes higher risk. P2P lending can be a great way to diversify your portfolio and potentially earn higher returns, but it's important to understand the risks involved. It's crucial to do your due diligence, research borrowers carefully, and diversify your investments across multiple loans to mitigate risk. Finally, let's talk about the most scalable income-producing asset of all, creating your own products. We're not talking about building a billion-dollar tech company here. We're talking about leveraging your skills, knowledge, and passions to create something valuable that others will pay for. Think about it. What are you good at? What do people always ask you for help with? Can you package that knowledge into an ebook, an online course, or even a coaching program? The beauty of creating your own products is the unlimited income potential. Once you've created the product, it can generate passive income for months, even years to come. Creating your own products is the ultimate form of leverage. You're leveraging your time and knowledge to create something that can generate income even while you sleep. So there you have it. 7 of the best income-producing assets to buy in 2025. From the stability of CDs and bonds to the potential of rental properties and creating your own products, there's an asset class out there for every risk tolerance and investment goal. Building wealth and generating passive income is a marathon, not a sprint. It's about making smart, informed decisions, diversifying your investments, and staying consistent over the long term. Which of these income-producing assets are you most excited about? Let me know in the comments below. Remember to check out the description for the link to see my video on Bitcoin. And don't forget to subscribe for more videos on personal growth, building wealth, and just learning to be comfortable. Until next time.